Good morning, traders. This is Alex with the StockMatrix program. It's January 5th at about 8 o'clock in the morning. This is my final video on the StockMatrix, at least on this version. We had a one-year kind of trial to kind of show people how the options work. Seemed pretty good. I mean, we had a pretty good bear market early in the year. We had a pretty good bull market then thereafter, and then a sideways chop, right? So a fully complete versions of the market that you can get into. You know, sometimes it can stay dead, though, for years, right? So it didn't quite do that. It was pretty volatile. And if you're on the wrong side of a few of these, you probably lost quite a bit of money or made a lot of money, right? For every loser, there's a winner. All right, let's get into it here. This is my X account standard intro here. I haven't really done any updates because there hasn't been any trades. We had a few right at the end, and I just went ahead and closed them out. You know, it's supposed to be January 6th, right? But Friday was January 2nd. Today is January 5th. So I closed it out Friday. We have 1 week left to go in our options that we have on. So either way, it was going to unwind, right, on its own. This is the portfolio from bar chart that we kept track of. You can see we had $163 in fees. Now what that is $1 per trade I put on there, so I could keep track of how many options we did or how many trades we did. We did 163 trades in 1 year. Now again, let me pull up I don't know, an S&P or something to kind of show the whole year's tally. Hang with me. Okay, I pulled up an S&P chart, a spot basically, futures chart. So this was the end of the year, the beginning of 2025. Here's January 6th was this date right here. Now that was the date we started. I think it was a full moon or some reason I decided to wait till that. I don't like doing anything at the end of the year or the first day or two of the year. So anyway, January 6th where we started, and I had no idea. I couldn't even fathom that January 6th had such a seasonality to it from a political standpoint. But anyway, didn't think of that. I would probably went a little further out. But you can see this was the beginning of the year. We had a pretty good cataclysm, of course, if you remember. And then that, again, an annual that you got to keep in your head for this next year and the year after will be April 7th. Now, you might want to use also keep April 9th. Both those two dates, if it happens to fall on that, are going to be pretty important throughout time because not only was this a low, I think it was a low in the metals and some other stuff too. So, but you can see this, we had a pretty good collapse. We did make money on the bear, on the put side, and then the bull started, and obviously we made money on the bull. And then here's the chop kind of started. Now, the S&P doesn't show it as much as some of the others, but you can see this, you know, we made a new low here, and then we went up, finally made a new high here, right? So, again, this has been basically a chop since here. A sideways action, right, which a period of rest makes sense, right, after a bull like that and a bear like that. A V bottom, which are pretty tough to pick anyway, unless you're trading a systematic approach like the StockMatrix or RSI or moving average, you know, some type of systematic approach, right, that doesn't care where you're in. So anyway, that's kind of how it traded. You can see in the last few months, it got fairly volatile, but you know, when you get into the individual stocks that we'll review, it wasn't terrible, pretty methodical, and actually, I got to say the volatility really died off, which again is part of that resting period. So anyway, this is the X account. If I kind of keep track of these, I won't do them like I did every day. I'll keep the charts updated and maybe put something on if something wild happens. Again, this is the portfolio. Again, we had 163 trades, which I mentioned. I don't know what they got 6% here for, but what is that, about 19, 20% return? You know, we gave back quite a bit. I think our high was at the highest was around 58 grand. Again, I didn't keep track of it, so I'm guessing a little bit. 56, 58, maybe 60 grand. I don't know. Was the peak right prior to the chop. So that's kind of where we stand at the end of the year. I think some of these trades could have been taken off, you know, a day or two early and maybe bought calls and maybe made a little more. But I just took it off. And we'll go through the charts so you can kind of see. But at the end, Google had a pretty good trade. You know, we made about 4 grand there. That was one of the big bell dingers. And Coinbase also 4 or 5 grand trade. Really no big massive losers. You know, just kind of sideways chop losers like Meta. Now, again, you got to remember, I didn't roll them out 90 days like I did prior because I knew we had a end date of January 6th. So I just rolled all these trades into the January trades and never went on. So it would have been maybe a little bit of profit, maybe a little bigger loss. I think it would have came out in the wash. There was no reason, to, you know, since we had an end date to go out to March options, right, and spend more money. And maybe that's something a guy can look into and go back and review. Maybe my time horizon is too long. But, you know, it did pretty good for the bear we had. I know it made at least 10, 15 grand on the down. Again, this is the shotgun theory, right? I have 17 select stocks. Some have made money. And I'll maybe put out one quick video and review at the end of the year how they did. I didn't do that yet. I did it halfway through, if you can go back and look at the videos. So, you know, June, July, I did one where I went and calculate it up. And the puts made money on the downside quite a bit. I know it was like 10 grand, maybe almost half of the money that we did make money on the puts. So if you didn't do puts and you only did calls and only went with it when it had a buy signal, I'm thinking you would have made about half as much. So instead of 20% return, you'd have made 10, which is still pretty good. For options with limited risk, I shouldn't say no risk. That's not quite true. You could lose all your money that you put in, but it's limited to that. If war breaks out, 9/11 hits, you get some wild action. Now we got jabbed on a few of these. We had good winners, and then IBM, as an example, had a wicked gap in there. Again, me, I bitch about that because it doesn't make any sense in this AI world to have any gaps of any large size. I mean, you see small ones, but never any large ones. So I think these companies do want large gaps. All right, let's move in. Again, when you create a portfolio like this in the bar chart, here's the dashboard. Here's your watch list. Now these will put up. Oh, I don't want the watch list of that. Yeah, this is the watch list of, well, everything that I look through, and commodities included in my new little program I'm going to be creating. So yeah, then you just go and then you do these flip charts, and it brings up all the charts that we have. Now these blue squares that you'll be seeing, that's the matrix part of the stock matrix, right? That's your, again, if you haven't watched any of the videos, this was part of my learning process, is showing how important the solar eclipse is. Now I'm more of a commodity guy, and I've kind of flipped now to stocks since I retired from the commodity business. But 66 market days, which is approximately what Gann used to do, the 90 degrees, right? It's approximately 90 calendar days. Now, when you get into the fall, right, you have more days in a quarter. So in the spring, it's less, but 66 market days from the solar eclipse. Now, what I've done is the high to the low of the range since the 66 market days. So this blue line is halfway of that range. Some of them are inconsequential, but you can just kind of keep track of that in case I forget to mention it. And you can see, there's also a halfway point in time as well, which is 33 market days. You can just kind of roughly guess it. I won't talk about it again. I'm trying to keep this a little short since we're winding down. But yeah, here's in the video, you can see bear. Here is basically since we started, we caught the bear. The bull came and really stayed in with the bull. We maybe got chipped and chopped a little bit. The video is heavily loaded with public money, so it isn't like an emerging market where it's got new money coming in all the time. And the AI world is that news has got to, that drumbeat's got to get a little less, I would assume, just because the platforms are already knowledgeable out there. But anyway, here's the year in the nutshell. Here's Meta again. Here's your matrix range. You can see it kind of picked the high for the solar eclipse time frame. If you're a trader like I mean, I like things that are a little different, and the solar eclipse to me offers that difference. Again, you can see here's the January 6th, had a bull, had a bear. I think we made money on both sides, or broke even on this one and made money on the bear. And obviously we made money on the bull. Meta was one of those that really did pretty good for a high dollar stock. Now it hasn't never had a stock split, right? So again, a lot of people can't afford 100 shares of Meta. I mean, you're talking 800 grand if you'd have bought the high, or 80 grand, excuse me, if you'd have, or no. Yeah, 80 grand if you'd have bought the high just on 100 shares. Well, you can buy an option for $5,000, $6,000, $7,000 that controls 100 shares, right? That's the advantage, that leverage advantage, if you want to call it that, of why the options are nice. Because again, I have went on the bar chart. Let me go back. The portfolio. I mean, I just stuck 150 grand in because that was Google says the average stock account average. All right, so that's why I put 150 grand in. But I don't think we used probably more than 20 grand of that. We'll say 30 just for safe measure. So, because some were 5, 6 grand, others were 600. So some were 1,200. So again, if everything was 2 grand average and times 17, right, that's the max. Puts or calls. Right now we as we ended, we have about half the puts, half the calls. So we're limited to the risk of some big calamity or something happening. Anytime you get all calls on, or in retro back in like January 6th or April 7th, right? I had all puts on, right? So again, that was kind of giving me the gut feeling like be careful. But anyway, here's the year in the nutshell. Let's move on. Shit, I'm taking way too long here. Here's Coke. You can see here's its year. We had an extremely bear market. We got in short here, right? Because I had to follow the trend. Loser, and then we got long, I think, in here. So we made money on Coke after that, and then lost money ever since. So if I remember right, I think Coke is one of those that we did not make money on. There was a few that I think Lynn might have been another one where we didn't make any money through the system of options in the stock matrix of making any money. I think we'd have lost more if we'd have had actual shares and trading 100 shares. But again, that's one that doesn't cost very much. So a couple $100 for a call or put, right? So maybe 500 if you went deep in the money with 90 days of time. Here's Google again, another one of those that here is January 6th right here. We bought it and then it got hammered, right? So we lost money and finally got the puts here. I think we made a little bit back on the put side, and then eventually we got long the calls and we never did really lose any. Maybe got spun here, or something. But Google was one of those that definitely had a good year, whether you traded options or shares, right? But again, the price of Google went from pretty cheap, almost doubled in value when we looked at it, or more. So it wasn't, but you can see the sequence kind of worked pretty good. I mean, there's some things we could talk about. Well, let me just do one real quick. Again, the speed of this range, right? So you can see, I'm just going to draw a line in here, and you can go back through. Now, you didn't know it until here, right? Because you knew the time frame, right? So you knew this window. You can see that it kind of worked as a speed value of your chart. You can see it's still working, right? And I'll kind of look at that a few times on other charts as well if I remember, if it looks like it. Now you can see we had these lines drawn in from the get-go. This was the previous decline. It kind of matched up, and then the time frame is now falling apart. So again, this was one of those. Where are we at? January. Yeah, we got in here. I think long, lost money right away. Then we made it back on the puts, and then it ended up going back up. I guess I forgot to draw the window in here for the matrix. Let me see. September 19th. $66 market days. 95 calendar days. It ended up being with all the holidays knocked out of there. So again, pretty interesting, right? I think that's definitely worthy. Let's move on. Amazon, you can see, the matrix was kind of in the middle of it, but in the middle of the matrix was the all-time high. So again, kind of important if that stays, if it sticks, right? Now again, here is one of those that we had January 6th. We got in. We had to follow the trend, so we were, I'm assuming, long. I can't remember. So we got long in here, and then maybe broke even, or maybe even was short and then went long, and then it went short, and then finally made some pretty good money in the short. It was a big downtrend in Amazon. Of course, if you remember, Jeff Bezos is getting out. He's getting out of all his shares, and you hear all that crap. I don't know how much of it's true. As we made new highs. Oops, sorry, Jeff, you fucked up. You shouldn't have got out. But anyway, it's half those stories you just. In the internet, I take the 90% rule. 90% is crap. 20% you can glean some information off, and that's how I view a lot of that. Because you don't know. Hell, he might have got out of 1 million shares, but bought 3 million calls back in his third cousin's account. I mean, you just don't know. It's stupid. Or some corporate account that he has set up. You just don't know. So yeah, there's Amazon in a nutshell. Here's Apple. Again, it's above. Here's the solar eclipse close. So until we, again, we know this will be support in all these charts. If you go back and review, and I forgot to mention it, but this previous solar eclipse will be support, which is right in this little arch here. You can see I got a little arch. So the close, this, I guess I got it marked with this pink dotted line on all the charts. That will be, now we hit it once, which is important. It tested it. So, but again, as longer term breaks, if you're waiting to be a buyer of Apple on a longer term pullback, that would be a good one. Back within the old highs, solar eclipse close. Now, if it starts breaking that and it gets heavy, then something's different. You might want to prepare yourself for something a little bigger. But here, January 6th was here. We bought the stinking high, right? Because we, had to go with the trend. Immediately got knocked out. Apple didn't have the biggest break, and it traded sideways for a while. Can't recall if, in the halfway point if we had any value made in Apple or not. Here's Tesla, a good trade. I know we made money on Tesla. January 6th was right here, so I think we bought it and then was a loser right away, and then we got into the April 7th low. So then we got long. Even though this sideways action here, I don't think we got spun. We had to roll though, right? So the value, the time value, which was there's three makeups of an option value. Time is one of the most expensive part, right? It's like a life insurance policy. If you have a 5-year life insurance policy, it's going to cost you way much more than if you had a 1-year policy. Well, same with options. The more time you have, the more something can happen. So the people are going to want more money because the buyers have limited risk and unlimited profit potential. Again, the opposite of that is the seller, right? He has limited gains and unlimited risk. So that's the downfall of selling options. Now, granted, they make more money over time, So, but that's the options in a nutshell, right? So your time is one of your. So we lost money not on price erosion, but on the cost of the option erosion. Um, Now that's what you don't do. You don't lose in a stock trade, right? You Time has no relevance. Now maybe time of money and the percentage and all that makes you lose a little bit, but you don't have any actual loss on the books. Lynn, kind of one of those I probably wouldn't have put in there if I'd have known. Lynn was kind of a hydrogen play, I guess. I have no idea what it was for sure, but it was an old company and it was volatile, so that's what I like. You can see we sold it down here and immediately lost money, and then I think we were long and then it lost money. I think Lynn was one of those that we lost on for sure. Now at the end we made money on the last trade. We got coming in. This bear we caught with puts. We now at the end we had calls on and maybe made a smidge. Yeah, here's Edison, the electric company. One thing about these utilities like ED and others, right? Some are local even. They don't ever lose money, right? Because if their costs go up, they just charge the customer more for on their bill. I had a bill in mine once. It was keeping out. No, it wasn't keeping out. Anyway, they had hedging losses was written on the bill, and they itemized that off. I go hedging losses. I've never seen hedging profits, so our bill goes down. But they always lose money in hedging. Why would you? I would fire that guy. So hedging, if they lose money, their bill goes up. I mean, that's just the freaking awesomest trading vehicle ever. But you can see it's been a dud. So we had a good bear, a good bull, and then the bear, and then a dud. So we made money. I'm guessing until this point, and then we probably gave back a lot of it. Again, we lost half our value. Well, probably half our value somewhere along the lines. And those little, no, that wasn't a very expensive one. I think $500 is the most we ever bought a call or put for. Here's Adobe, again, a contractual company. Doge probably got rid of a lot of those, but it's a bear. I'm comfortable in short as a logical thought process. 66 market days, kind of didn't do nothing. It did make a new low in that sequence, so something to note. IBM, another one after doing this for a year, they just are so crooked. They gap around, for a big company, and supposedly have a smart AI platform, and they got weird ass gaps. This gap here started a lot of bad nut stuff. That told me to be careful. This gap down, intraday, no report. Just decided to do it. I don't know why. How's that possible? I had one here, but that's where knowledge of the chart, right? You look back at all the gaps. If there's, you got to expect those are going to occur. That's like this. If it ever starts being a bear here, it's kind of feeling like it's going to be. You can see a gap just like this here, right? You all of a sudden open up down here, take out these stops. Like, man, why not? They've proven they can do it. So, and the volume occurred on the gap. Then they went up, made a new high. How's that possible? Anyway, so that's again, you didn't have that with Apple, right? You didn't have any massive gaps. There's a few though that, again, you look back at the chart and there's a gap down. So they do it. Here's a gap up. Here's a gap down. So they like those gaps. So the company, the AI that's been traded. Now AI isn't old or new, right? AI's been around for 5, 6, 8 years. We're just starting to hear about it publicly. But these large companies have had AI platforms now for quite a while. IBM is one, so they can program it however they want. If they want gaps, guess what? You're going to get all the news that creates gaps. This was one that really was a bull. BK. It's a Bank of New York. We had a little flip here, and again, the low occurred on April 7th, just like a lot of them. And the secondary low, which is maybe important to look at, is April 21st. But it's a bull. It made good money. Percentage-wise, it didn't cost us more than $300 to $500 at the most to buy a call, controlling 100 shares. It's been a really steady bull with no weird ass gaps. PJ, kind of Procter & Gamble, of course, the food dye issues and all that poison food crap news that was out there. I think, an administration change that pushed a lot of that. I think that was the decline. But you can see January 6th was right here, so we bought puts, I'm sure, and then got lost right away. Went up and didn't make a new high, but it challenged it pretty steady, and then it failed, right? And that was the end of the end. I don't think we made money in Procter & Gamble, one of the losers of the bunch, and one that I would not put back in my system. Now, if you're going to trade full moons or monthly cycles of some sort, a longer term time horizon, I think you'd be fine with Procter & Gamble. But again, it's about the rate of return. You want stuff that's a little more volatile, a little more steady Eddie. JP Morgan was one of those, even though I'm not a big fan of the diamond. The stock trades are pretty steady Eddie. They're not weird. This had a big crackdown. Lost a pretty good percentage, but again, it was within the realm. There was no huge gaps that caused weird action. you know, if they're still short silver, and maybe they're long now, who knows? But you can see definitely a potential high because of that. And again, you don't know, right? Hell, JP Morgan secretly might have bought it. You know, they're short uh, COMEX futures and losing their assholio, but they're long Shanghai futures. I mean, you just don't know. They don't have to report that. Um, Now, shareholders should know, but you know what you know, you don't know. That makes sense. I forgot to put the. Here's this pink line, of course, is the solar eclipse close. I forgot to put the little window thing in there, but it's just, you know, kind of a buying area, selling area. If you get below it, makes sense down the road. Coinbase, you can see one of the better trades. You know, bear wise, we caught puts, made money on puts and calls both. It's you can see that now this gap down cost us money. I think we got short down here, so you know we had our stops here and we got filled here. Hence the options and got filled worse. So this is one that we had a good profit in. I remember this trade because it goes, what really? And then it gapped down. So instead of making 5-6 grand, we made like 500. And I was like, what? Because we were long from here, right? So anyway, just how it is. I mean, I totally don't understand these gaps right now. Of course, IBM is the first one that did it. A few trades did it after that. In the AI world, these gaps are criminal. They're supposed to be smart. Now, again, they're programmed to be whatever, dumb, smart, gappy, steady 80. You can see it's just trickling down, though. I bought Coinbase for the trade on Bitcoin. I couldn't really find anything that was decent with volume and older company. Coinbase kind of, no, it did. These swing highs were swings on Bitcoin. But like this one, I believe was the all-time. This high right here was the all-time high in Bitcoin futures or Bitcoin itself, right? So it worked. It was a swing, but it missed the all-time high. So percentage-wise, it doesn't work, but it does give you some alternative. So again, if you're bullish Bitcoin, here's our 66 window, kind of made a low. It had a bear trap, right? This is a little bear trap. I kind of like that as well. But the trade action is a little concerning, right? Definitely not one that I don't like just going out and buying. If I had 50 grand laying around, as one of them, I might buy a few calls and something, or figure out if you got an option available to in another exchange, right? Because Coinbase and stuff like that you can't really trade options there yet. Now, if they ever do that, that'll really change the market, in my opinion, because then it offers less exposure, because you do get good moves. Anyway, here's Cintas, the last of the bunch. You can see that I forgot to draw the window in there, but this is the solar eclipse close right in here. So that's resistance, right? But one of those, I think we would have bought calls and then probably would have had a little extra loss on the books if I would have done it legitly. But again, I think the last day was a puts, it went from calls to puts. Anyway, it doesn't matter. Not a big deal either way. But Cintas is one of those that, again, had a big gap. Of course, after the stock split. Market never goes down after a stock split. This was 20%. Keep that in your mind. And then it went up, made a new high, really, after this bearish news, apparently, that caused this huge calamity. But again, these companies like this are BlackRock protected. So you can see the parallelness here. Makes a little sense. But if you start breaking these lows, something's up. Might be a high for a while. Like in here, we made a high for quite a while. You just don't know, right? You got to be a little cautious, and maybe we're in for these. Of course, there's fundamental news in Cintas that didn't make any sense. I had my sister working there, and shit, they got their computers hacked. I tried to find news on that computer hack, and it never did show up. So, and I'm going to review the actual charts that I use on the StockMatrix. Hang on. Okay, I got the chart set up. I just went back and put them all on the same date, right? It's basically a year's worth of data. I had to, when I did this trial, I had to go back at least 6 months or more. But you can see this is NVIDIA, pretty good bear again in April 7th time frame. We got stopped into the long and really only didn't get spun till here. So NVIDIA was definitely a winner. Got spun here at the end a little bit, but again, didn't cost again, because some of these are break evens or small profits, right? So NVIDIA was one of those that we made money on. Here's Meta. You can see just by the chart when it's off the chart, right? It's more volatile. But you can see that, of course, it's a $700 to $800 stock down to 500. I mean, I don't know, whatever the percentage that is, that's a pretty good hit. But you can see at the beginning of the year, this was the flim flam action. Ended up, it's long term. We're in the long position unofficially, I guess, with the stop here. Short term trend did turn down, so got to be a little cautious there. Here's Coke. It fits into our window, so you can tell that the volatility was pretty non-existent. No, it did move, and Coke's all right. But these long-term sideways actions, it's an option killer. and you make more money on the short options. You lose here and make money there. So a Coke is one of those I wouldn't have in there again. Well, here's Google. You can see it's off the chart. This was the action basis. That again, a heck of a move. And again, I really should have changed the. Again, I keep everything mathematical, right? So I can change these charts different, basically slowing down the speed or increasing the speed, like you would with a 1-to-1 to a 1-to-2 to a 1-to-4, 1-to-8, right? Your trend lines, GAN lines should keep mathematical same, but that's basically the same thing you do if you change the speed, right? Your 1-to-1 has changed because of the speed, not because of the line increase. Anyway, here's Microsoft. Again, you can see the volatility there as well. It had a really good pummel. A little later. I don't know if it was the 7th or the 8th. I can't remember. But anyway, the end result was this actional high. Again, the AI blunder bust that occurred. You see we're short. We got short here. Of course, this big bloop up left a lot on the table. Of course, that was one of the probably some. We had 58 grand, only up at 28, so we lost. Uh, uh, I think probably 25 grand somewhere. Well, these why, right? Because at the peak of your equity, which doesn't make any rhyme or reason, you can't claim a profit until it's off the books. Well, we gave all that back, and then bought puts here, made money on the Microsoft on the end. It still would be short. Here is Amazon again. The gaps up. I mean, you can see it intra bar here. Don't make sense. Crooked, 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 crooked as the day comes. Volatility, it's just a chopper. If we made money in Amazon, that's a job well done. Because I guarantee if you're trading that, unless you're day trading, you would have lost money. True day traders get out every close. They don't keep any positions on. So if you're day trading, you might have made money on that. But other than that, you probably would have lost. Here's Apple again. No gaps, no weirdness. Of course, it's fully long, fully implemented. And by the way, if you want, I forgot to mention this. These 1-to-1s are pretty good. This one was a 1-to-1 squared. This high, Gann used to call it time and price squared, right? Because it squared out this low on Apple was from. Again, I had to go back and plug a lot of this data in, which seems kind of wasteful now. But that was the low that occurred in 2022. So, which was at 123, whatever it was, 124.28 approximately. That's the square of 9 price, right? So that one bar, or one of these quarter moon periods over for this mathematical square of 9 up is a 1-to-1 of. It took that long. You can see, it picked some lows, picked some highs, but it did square it out to the nib. Pretty important, right? Now, again, I forgot to mention on the first one, so, and I won't mention it again if you see it, right? But now you got all these squares. Here's one coming off the low, right? So to me, this could be, if that's a high, this one could be a low. It could be pretty cataclysmic. I mean, here's your support out here, right? I don't want to get into giving you where I think it's going to go because it don't really matter since this is over, but pretty interesting, right? The squaring of time and the time and price squared. That's what Gann called it because, again, it happens a lot. Now he used bar days, right, for every day it traded a day, or he did it weekly, monthly. I don't think he ever did moons like I'm doing. Of course, he didn't have the ephemeruses like we do now that give you solar eclipses in 2080. So anyway, Tesla did the same thing. We squared out from the low. Here's your midpoint, or your cardinal cross, as Gann would call it, area. We did poke a new high from that, barely, right? So we kind of have a bull trap. Tesla's one that you got to be a little cautious on. Now, again, Tesla makes sense long term, fundamentally, maybe even. But the silver state with the batteries, they're kind of behind the 8 ball a little bit on the tech part. I don't know why we still got to assume silver is the only way to make batteries. I don't believe that for a second. I just think it's the talk of the land. I mean, why can't we make? I'm not a chemist or anything, but we should be able to find something else besides silver to make silver strips for solar panels, and the compression of rolled up silver for a battery. I mean, well, we knew that a long time ago. Well, it just all of a sudden is in the news. Capacitors that recharge themselves. I mean, there's a lot of technology out there that we could bypass silver with. Maybe it's salt and silver compressed 2,000-pound press. I mean, you could surely find something else besides, and maybe there's stuff already out there. But the silver is a big component to Tesla. I'm going to tell you my theory on bull markets in particular, especially commodity side. When you run out of the commodity, does the commodity go up or down after that? I know in soybeans, I've proven it over time. When you start running out of soybeans, the market does not go up anymore because they have no product to sell in the market. Hence the up and down part of the chart, right? You have nothing there, so that it goes down. And you look at the data. Oh, exports were off, well, because there's nothing to export. There's no soybeans, right? So the numbers look weird and bearish, right? So, but that's the issue. And same thing is going to happen to silver, I'm afraid. And I don't know about gold, but the supply side of silver is, well, they're running out, right? Tesla needs it. Solar panels need it. China's hoarding it and causing a calamity for you. I don't know how many ounces we use in a ballistic missile, but quite a bit, I'm sure. So, if you run out, is the silver going to go up or down? It's going to look bullish, but then the numbers are going to look bearish. Oh, they're not exporting any silver. Well, because there is none. So the market has no data to go on as a supply. Your biggest bull markets is when you have supply. Those are the easiest to trade and all that. And maybe some of these companies you can relate to the same kind of idea, in the AI world, right? Well, if the silver runs out and the AI stalls because we don't have silver for the AI platforms, is that bullish, that thing, or bearish? Well, again, I can test from my 4 decades of trading that, going on 5, that when you run out of a commodity, it's over. I guess there's nothing to trade. And that's what I'm afraid silver's going to be. You got people that are pushing the buttons to make silver bully. I'm not saying it ain't. I mean, it's always been one of those that have been lacked. But there's a lot of silver in the country out there that can be brought in. I digress. But it's important. Kind of my philosophy of all my experience is that, right? I mean, you want to understand and think about something, right? When you have no more product to sell, is that bullish or bearish? Think about that in anything you do, right? I don't care if it's Lynn that I just pulled up or Tesla products. If they don't have any product, is that bullish or bearish? Especially commodity-based like Tesla is, and Lynn, of course, is all commodities. If they run out of this or that, is that bullish or bearish? Does a natural gas, when it runs out in a cold streak, if they're running thin on supply, is that bullish, that natural gas, or is it bearish, that natural gas in upcoming months and quarters? Inevitably, that's why you make your highs when you're on the tightest supply, and that's when you make your lows when you have the biggest supply. It's counterintuitive, I know, but you got to think of why. So when silver runs out, is that bullish or is that bearish? I contend it's bearish, just from my experience. Not saying you can't have 20% whipsaws, but looking back from now, if we're truly running out and the volts are bear, which I don't know if they are or not, I don't trust the news, but if that's truly the case and we've run out, the top is in on silver. Here's Adobe. You can see, pretty high dollar stock, just kind of slowly eroding down to nothingness. I mean, I've never paid for Adobe ever. Here is IBM. You can see. Here's the beginning of the year. We got caught in that Jim Jam. We got long before the gap, but then we ended up, we did make money on the first trade, looks like. Lost money in the second trade, made money on the third, so made money on the fourth. So even though I bitch about IBM and their gaps, now we got filled way down here, right, on this gap, but we still made money. I bitch about it, but we still made money in IBM, just in a nutshell. But how they do it, I don't like it. I don't like it enough already. Now here's Bank of America. You can see the bull, nice steady Eddie. It's one that really surprised me. It's a very old company, one of the older ones we got. So Bank of America did well. And again, here's, if you go back, this is a solar eclipse close. Again, the longer term resistance. You can see I post them, keep them on my chart. I can go out indefinitely, but I just keep them until the next solar eclipse and kind of know where they're at. JP Morgan, one of those other steady 80 ones. I know Jamie Dimon will be in the news here in the future. More than likely not a positive light, but one of those that squared out the one-to-one squaring of time and price. Here's the other one that'll be, if this is a high, maybe it isn't, but this one will be likely the opposite. Here's Coinbase. Again, here's squaring out of the range, not time and price. But you can see it broke something. It did something it shouldn't have. It's smelling a little fishy. If this is truly part of the Bitcoin thought process, this is concerning. My comparison on Bitcoin is the same as I did with silver or soybeans. If you run out of Bitcoin, is that a bull or a bear? If you run out of coin and there's less available, is that a top or a bottom? Is that going to make it go up or down? You got to think about it. Now I don't know the answer. I'm just from my experience, that tells me to be awfully cautious. If the mining of Bitcoin is diminished, I think that's bearish. I really do. If you run out of something that's not bullish, you think it is, and it might be for a few days here and there, but in the long-term thought process, and a year later you look back and go, man, what a bear market after that bullish news. Well, it's because they ran out. Cintas, again, the BlackRock protected company, it did all right. I think we made good money on Cintas. I like the way it trades. It did have some gaps in there, right, initially, but I like the way it trades. And the times that I use uh, with the quarter moons did work on them. When it broke, it didn't like get weird. It broke. We got filled here, and that was the top of Centos, and it went down, and then we got long here, right? I mean, it's a simple process. It doesn't get too weird. So Centos, I like. There's a few of these, at least 4 of them I wouldn't have had. But as an overall deal, the matrix trades did okay. Again, I just picked the longest term ones, right? I mean, I didn't really have any idea. Now and again, maybe Coke as an example that we lost on will be a bull for 3 years straight, or a bear for 3 years straight. We make money on it, right? You just can't ever discount. And again, that's the shotgun theory, right? We have all these stocks on in the option market, puts and calls. We're up long term. We're up 10, so we have 10 calls out of the 17 select stocks. That means we have 7 puts on, right? So again, it's a limited risk strategy in that regard. Short-term trend, we're up 8, short 9. So again, the short-term trend is actually leaning to the negative right now. So the total index is around 48,000 or 481,000. I didn't punch that in. Hang on one second. Well, I'll just do it with you. That way you kind of know what I'm doing. All right. Now I got these on my watch list on bar chart. Now you can download once a day for free all the closes. Now you can see that they're starting to trade because they're open. Now, so it'll be a little deceptive. I should have done it yesterday or before I started talking to you guys here. So it prints all those off on an Excel spreadsheet. So here, this is my stock matrix part of the deal. And let me get up the matrix. So that's the closes. And then I go over here and I paste those closes. And then that gives me the last trade, basically not closed since I didn't do it before it opened. So yeah, we're at 480. I mean, you can see I haven't updated it since December 2nd. So a full month went by, and we've only made $3 grand more. So it's been a chopper. Our peak was October 28th at 511,000. 485,000 is our current. I'm gonna go back and see if I mark the lows. Looks like 372,000 in April 22nd. Now that was after the April 7th, right? So some of them. So that's interesting, right? So we went from 300 on April 7th, 372,000 to 511. So that's a pretty good jump. Now, as an index, meaning I have these select stocks times 100 shares since I'm doing options, right? So these are the values currently. Again, since it's open and trading, these are the values currently. $485,000 of these select 17 stocks. So again, it was over $500,000. So you're for 30 grand or 20 or whatever I got value-wise. You're controlling for 30 grand, let's say. I know it's way high, but let's say 30 grand. You're controlling $500,000 worth of stocks using the options. So anyway, I've kept track of that index. I didn't really give it much. I did it for my own thing, but then I realized that's kind of important, right? It's like the S&P or the NASDAQ or the QQQ, right? You're tracking an index. That's what they do of their stocks. Now I did it times 100. Now, if you want to do it per share, right? It's divide that by 100. I just wanted to keep track of it because again, I'm doing 100 shares in the options. So now if you did just one share, it's 485. $4,850 is the average. So again, times 100 is 485,000. So that's what we're controlling. Anyway, kind of a note there. Well, I'm starting to ramble. I'm going to sign off. I went way longer than I thought. But everyone have a great year. And don't be afraid of the options. Look through them. There's certain times when the news is weird. Let's say you're a dividend trader only and you got a shit ton of something on. You're getting a little concerned about this or that, or the news has got you spooked. Now, remember, the news is bullshit. 90% of it's bullshit. You only glean 10%. That's that's just a good rule. AI, same way. You hear AI shit. Everything's fake. Almost everything. So all the news, all these individuals that one guy we used to listen to, he talked about prepping and listen, and then he went into political shit, and then he's like hammering. I go, I'm gone. See you. Bye. I didn't why I signed up. I mean, everybody's political. It's stupid. Get off the because then they've been paid. If they never did political stuff, all of a sudden now they're political and telling me what I think I should do. I go, frick you. I mean, I got my own opinions. I buy and sell my silver supply based on price and what I know. I don't give a shit about what the fake news says it is. Some AI Asian dude comes on that I posted one time when the silver had a pop. And I go, oh man, this has got to be high in the back of my brain. But I thought I better post it because he's, it's an AI that pulls off the data right away and he spits it out. Of course, it's a bullish AI. And if you had a bearish AI, it would spit out all the bear shit that's going on. All right, I'm rambling. Everyone have a great year. Thanks for listening. And go back and review these. Again, I tried to teach people how to set it up, kind of an index like this, using options, which you don't have to use, right? But it gives you an idea of, there's people out there, propaganda that says, oh, options don't work, don't ever use them. Well, that's full of crap. I proved it. Right here, we made 20% trading freaking options on volatility, up, down, dead. All right, so had 3 of the characteristics of a trend, and we ended up gleaning a little money off of it. I don't know what the S&P's up for the year, but 20% seems pretty good for not much risk. All right, everyone have a great one. Bye.